Sabharwal, who is joining us on the show right now. Hi, Sandeep. Good morning. It's been a fresh start for the markets, but Sandeep, how do you see the markets? Because over the weekend and in the last week gone by, we are seeing that the voice against the market forming a bottom rather is getting stronger. But help us with your sense that now that we are off and we are done with the earnings season, what is your outlook and any sectors that you want to point out this morning?
The earnings season overall was muted, and the expectations were also not that great, but then overall it remained muted and driven by low consumer demand, tight liquidity impacting businesses, and plus the curtailment of government expenditure, which we know has stalled several project executions, etc. And to that extent, earning growth picture was not great, and we are through the earnings season now. Now, overall valuations have become much more reasonable, so I think we should be more near the bottom rather than the possibility of any significant large corrective move from here. Globally, also, if you look at various parameters which include the easing off of US bond yields as well as the easing off of the US dollar, all those also are uh, sort of positive for emerging markets, along with the significant rallies which we have started to see in some emerging markets, large markets like Brazil, Hong Kong, etc. Typically, once that starts happening, people start revisiting their entire emerging market stance and the huge outflows that were happening from emerging markets. There's a possibility those could also reverse going forward over the next few weeks. I think right now people in India should be looking more for buying opportunities. And if you look at the large cap universe, then I would think that the financial sector looks well placed. The larger banks, auto companies look well placed because the growth as well as margin outlook is good. And many infrastructure slash capital good companies also have got severely sold off. So I think some of them also look good.
Interesting you say that. Financials also almost seems like a consensus call, Sandeep. But autos, we were just going through the Motilal Oswal earnings review report, and it says that the top upgrades for FY26 estimated basis, Maruti, Tata Motors, those are the two auto names in there. Having said that, we've seen outperformance from select two-wheelers. M&M, of course, has been a strong one. But do you think now going bottom up within auto will make sense and maybe bet on a Tata Motors perhaps?
Tata Motors, there are still some uncertainties, but the stock has corrected severely. So to that extent, because the corrective move in the stock has been so severe that there is obviously value in Tata Motors, although the growth picture is less clear than some of the other domestically focused companies who also have got a good export presence, like you rightly said, Maruti or Bajaj Auto or M&M. Ashok Leyland reported very strong numbers. So I think so. I think the domestic plays with export opportunities rather than something which derives the maximum value from the overseas market like Tata Motors have greater clarity. That said, Tata Motors has corrected from 1150 to below 700. The possibility that it could give a decent bounce back also remains high.
On the chart as well, Tata Motors, could it bounce after the severe fall the stock has had?
No, I'm not sure that the stock would bounce immediately. So there could be a mean reversion. So the only positive part for Tata Motors is the stock is at a 40% divergence from its 200 DMA. I think the 200 DMA is around 1000 levels for the stock, and the stock is sub 700 points. So I think that could be the only catch where eventually what happens is after a 35 odd percent kind of a divergence, the stock tends to just narrow the gap of the divergence, whether it's on the upside or whether it's on the downside. In this case, it's downside for Tata Motors. But then, there is clear demarcation which the auto stocks are going into in terms of sector trends. You're looking at, Eicher Motors, for example, from the two-wheeler pack, that's an outperforming stock. You look at Maruti from the four-wheelers and M&M, these are strong outperformers which have managed to withstand a major phase of the market correction. So the markets are pricing in that maybe stocks like Tata Motors, and if I could probably put Bajaj out and Hero MotoCorp, these stocks could remain to be underperformers for the near term. So I would, unless the market changes its structure completely and we are looking at a very strong resurrective kind of a move, then it makes sense to buy these underperforming names.
All right, more underperformance likely in store for Tata Motors is what the charts are indicating. But Motilal Oswal has come out with a note on the Q3 earnings roundup, where the brokerage firm now has gone ahead.
What's been your reading on M&M, and how do you see M&M actually going ahead and doing well, specifically in the EV space? Because like we were just discussing on Tata Motors, that was the leader in the EV space, but now M&M going in the EV space a big way. What's your reading there, and what's your sense on the stock price as well?
Yeah, on the large cap side, M&M is one of our top holdings, and we believe that it will continue to do well based on its robust growth and outlook on the SUV side. Like if you look at the auto companies and look at companies who have been able to make products successful and make the products big, M&M stands out, and it's been somewhat an underappreciated company vis-a-vis other companies in the auto pack. So I think it will do well, and the added impetus it's getting is also from the tractors and farm equipment overall segment also starting to grow after 2-3 years of slow growth. And M&M is also taking market share out there. And the good part for them is that tractor margins tend to be much higher than auto margins. So the earnings fillip they get when tractors revive is much greater than when autos do well. I think it will continue to do well in my view, although it's one stock that has not corrected much and hovering more near 52-week highs rather than near lows, which many stocks are doing. But given the robust outlook, I think it will continue to do well.
Okay, that's that on autos and where M&M is placed. Let's look at one space which has been seeing very curious moves. Look at the way some of the jewelry stocks have actually panned out. We were just looking at Senco Gold. While from its listing, it's seen an uptick of about 66%. But in the last 1 month, in the market correction, that's also brutally fallen by about almost 30%. This Kalyan Jewelers, of course, that was a special situation name. 564% of an uptick from its listing, and in the last 1 month it's fallen 8%. Maybe in the last 2 months the move would be more exaggerated. And names like P.N. Gadgil, that's underperformed from its listing, down 26%. In the last 1 month it's fallen another 5%. Sandip, what is it that you make of these, jewelry stocks? I mean, yes, there were all the concerns around, lab-grown diamonds and what have you, but especially in the earnings and the way the kind of margin squeeze some of these companies have reported.
I think in the jewelry space, without going into specifics of each of the companies and whether we should be doubting their financials or not, my view is that when a market leader like Titan was reporting a squeeze in margins or a pressure on growth, many of these companies continue to show aggressive growth and higher margins, which tends to become unbelievable. And I think a large part of that could have been because of just stocking. There were no second sales happening actually, and they were just putting in product into their showrooms, etc. And now that adjustment is happening. So I think valuations, even after these falls, are excessive for these companies. Like some of these smaller companies trade at valuation, even now, after a 50% drop, which is higher than of Titans. I don't think they deserve that.
All right, so that's the take coming in on the jewelry space, given the fact that the valuation that most of them are actually trading at. Sandip, I wanted to get your view, especially on the chemical space. How do you see this one? Because after a lull of about 3 years or so, do you think that this one will now start making a comeback, given the fact that the Trump rhetoric on the tariff is just getting louder by the day?
So I think without getting into specifics of stocks here, because I don't invest too much in chemicals, my observation from the results which have come out over the last 2 quarters is there are some segments of the chemical cycle where there seems to be very strong revival in pricing. And those companies have done well, which we saw from a company like SRF, etc., also, and their guidance. And then there are other segments where the pricing pressure continues. So from my side, I find it very tough to go chemical by chemical and evaluate these companies. That's why I don't invest. But for people who can do that, there could be opportunities.
Sandeep, I also want to talk to you about, pharma as a space, and you track this one very closely. In the time of tariffs, how do you think Indian pharma is placed?
I think from whatever news flow has come out of the meeting of the Prime Minister and the President of the US, it seems like there won't be any imminent tariffs coming on Indian products, at least in the near term, till the negotiations go on, which could take a few months. So I think near-term concerns are not there. Longer term, if the issues are not resolved, that then for companies who are majority exposed to the US, there could be some issues. So I think some adjustment of valuations are happening because of a potential threat, although small, at some stage. So, but the overall pharma universe, if you look at the results, unlike many other sectors, we've seen overall margin improvements, sales doing well. So the sector as a whole, I think, is placed well. But I think with the small risk of that.
In fact, on the subject of US tariffs, and if at all, will it have an impact on Indian pharma? Would it be huge? Would it be minimal? That's exactly the question that we posed to Sun Pharma. Dilip Shangvi, he was with us at the Global Business Summit over the weekend in New Delhi, and here's what he told us.
Products that we supply to the US fulfill a very important requirement for the US government, which is to control the healthcare cost in the US. If you read some of the statements, then they're also looking at multiple carve-outs so that some of the products will be kept out of the scope of the tariff. Even if they are not, I think the generic business, as you're aware, has undergone significant price erosion over last few years. So in case if tariffs are levied, I think most of those tariffs will be passed on to customers. So I'm not seeing a significant negative impact of the tariff on the industry, because the competitive advantage that we have as a country is long term. It's not going to go away overnight. And even if some manufacturing was to start, in pharma business, it takes at least 5 to 7 years to bring a new manufacturing facility online, get products approved, start manufacturing. So it's a long-term process. So I expect no immediate short-term impact on tariff in pharma industry.
All right, so that's the big comment coming in on the pharma space as the index has been hitting new lows. So let's see that whether we are in for some rebound or not. But back home today, all eyes will be on BHEL as well, because as the company in the announcement did say that they have secured a new order worth 6,700 crores. This stock, of course, has been underperforming too. But Kunal, can we have a chart check by you, because all these PSEs rather have been underperforming, and BHEL, of course, below that 200 mark, but it's indeed a positive news flow. But what's your chart reading?
Yeah, so the stock has corrected quite sharply. So I think from 350 odd levels, which is the high for BHEL, the stock has corrected almost 45% broadly from its major highs, and now I think closer to 200. What we've seen in last 1 month or so, that the stock has gone through an extreme volatility, but then I think somehow closer to 200 mark is acting as a pivot for BHEL. I think the recent highs, if I'm not wrong, for BHEL was around 217 levels on the spot, and the low was around 185-ish for the stock, which means plus minus 15 odd points from 200 seems to be a good trading range for BHEL. So I think closer you are towards the lower end of the price curve in terms of this pivot swing, we could be looking at the stock getting into a buy zone. So 185 is a very strong support. 185 to 90 could be a good accumulative territory for BHEL.
Sandeep, you were talking about financials as a pack, and you did talk about banks as well, but I want to talk about Bajaj Finance. From those 6,400 thereabout levels in just November end, it's now at 8,000. You think much of, or rather 8,300 actually, you think much of the move is behind us, or is there more to go for Bajaj Finance? And can one still buy the stock at these levels?
So I think a lot of the positivity is already in the price because given the issues which are seen in the unsecured lending side, there was an expectation that Bajaj Finance also will see pressure on their asset quality, which somehow they've been able to push back or not have. And I think that's led to the re-rating again. But I would think that a large part of that positivity is already there because the divergence in valuation between Bajaj Finance and the rest of the financial pack, which also includes the large banks, has again become quite high.
Right. So when you talk about banks, particularly Sandeep, I wanted to understand what would be your pecking order if you talk about the banks?
So purely from a return potential, I would think that Axis Bank looks best placed in terms of reward to risk ratio at around 1,000 rupees. ICICI Bank for its consistency, and then we could have a pick of Kotak or HDFC. So I think all the large financials in the next 1 year should do well. Now, some will outperform, some will give lesser returns, but the positioning is strong for all of them, I would think.
Right.
Other than banks and financial, Sandeep, what else have you been buying in the last 1 month, and any consumption names that you may have added, either consumer goods or FMCG?
Yes, I think across the board, so I think the stocks have fallen so much that there are so many stocks one could have a look at. But I think if we look at the consumer non-durable pack, where I think the impact of tax cuts and potentially lower rates will be greater. So I think companies like V-Guard Industries is something we've been accumulating. Crompton Consumer seems well placed. Havel's valuation are high, so just looking for some better price points. I think Voltas after the sell-off also looks decently placed on the durable side.
All right, but Sandeep, within the smaller sector, do you have any take on the textile space as well? Because just over the weekend, we also had Prime Minister Modi at Bharat Tex 2025, where he flagged off that rupees 9 lakh crores of textile export is ahead of 2030. And also there was a news flow stating that now some of these US majors are now looking at Indian markets, or Indian suppliers rather, for outsourcing after what's been happening in Bangladesh. So given the correction, do you find any good opportunity within this space?
Unfortunately, I don't track it so much because the performance of these companies tends to be very volatile. So it's tough to take a longer term view.
All right, but Kunal, any of the stocks within the textile space standing out for you right now?
Well, not much, because I think most of these stocks, like Gokuldas Exports, you've seen, Century Textile, etc. I think many of these stocks have gone through a very sharp correction. So I think at this point of time, it becomes very difficult to try and give a contra call. Even the likes of Arvind, Welspun, etc. Many of these stocks have gone through a sharp, correction. And it looks like that the correction what we've seen so far in the recent past, especially in the last 1 week, 10 days, is on the back of much higher volume. So we wait for the point where the stocks come back into a spring breakout mode, and I think that could be maybe another 5% 10% upside for these stocks from their recent swing lows.
Sandeep, the maximum downgrades this earnings quarter have come in for a JSW Steel, for a Tata Consumer, Tata Steel, DRL and Trent. Anything from these sectors or this stock list where you think that much of the bad news is already in the price, and can one start accumulating any of these names now?
The steel, unless and until there is some relief which these companies get from the government in form of some anti-dumping duty, etc., which might be tough in the context of whatever tariff news flow is going on. The next year could be tough for these companies. The good part is because the input prices also have moderated so much that they'll still be in profits. So to that extent, there's no risk in terms of these companies going into losses, but there is no potential upside per se. Trend among the list companies you quoted, I think Trent is something which at some stage will come into a buy zone. And I think that's what we could watch out for because the stock's already down 40%. But still at this price, it trades at around 67, 68 times on consensus earnings of next year. I think uh, either there has to be a stronger growth pickup or valuation need to moderate more. So we'll watch out for this.
All right, then we leave it there. Thank you so much, Sandip, for joining us on the show to give us a glimpse of which are the sectors that you're preferring and which are the stocks that you are liking at this point in time. Thank you so much for joining us this morning. We're back to the biggest voices from